Good evening, everybody. I hope everybody's having a nice summer evening. It's nice and refreshing here in Pittsburgh. Had a great weekend over in New Jersey. One of my fraternity buddies' daughters were getting married, and we've got a group of fraternity brothers that have been getting together every year ever since we graduated, so we've watched all these kids grow up since they were babies. Anyways, it looks like the market didn't do a whole heck of a lot today. Didn't do anything. They'll change our upward trajectory as far as an uptrend, staying above the T line. Dow consolidating a little bit, and then trading back up near the top end of the trading range. The NASDAQ, pretty much the same scenario. Traded basically unchanged on the day, but mostly traded down, and then came right back up and traded right where it opened. So didn't look like there was anything of any major change in the investor sentiment. S&P 500, whoops, still this nice steady uptrend. And let's see what else. Interest rates, just kind of this big, long, steady uptrend. Looks like it's supported on the T line, which at these levels right now, interest rates are really just insignificant unless you see a huge, huge sell-off. But right now, interest rates being so low, it's not any concern to anybody. And crude oil prices in this steady uptrend, staying above the T line. So as we can see, every time it came back down below the, or bottomed out, J-hook pattern. So still moving steadily to the upside. Oh, gold. Gold, very strong move, still moving up steadily. Same with silver. Silver is broken out. Maybe we need to make these a little bit smaller. There, you can see more of the chart. But as we can see, silver broke out through this resistance level. Doji gap up. Anytime you see that doji at a resistance level and they gap it up, that means they've made their decision which way to go. Feeder cattle, still in a nice little J-hook type pattern. Trading up a little bit after hours. I am still long live cattle. Same scenario, bouncing up off this off the T line, still moving higher. And what else do I have? Lean hogs. No. Maybe I have both. Cap on live cattle. Some of the grains. Cotton gotten whacked. There's your bearish doji sandwich. Notice that it failed. Notice where it closed, right here at the support level, making this a very obvious open tomorrow if it opens weak, not supporting here. Very obvious bearish J-hook pattern. And soybeans doing basically nothing. Kind of just hovering in here, trying to bottom. Oh, these things are back again. I don't know how to get rid of them. Trying to get back up through the T line, but not having too much luck. And let's see if wheat is doing anything. Wheat is still in this downtrend until you see a buy signal and a close above the T line. Let's see, gold, silver, dollar. Dollar rolling over, but looks like it's come back to the 50, which would be expected. Notice how it was trying to use it as support here. Pulls up, comes back to see if it's going to act as support. Right now, I wouldn't be trading the dollar one way or the other until you see a definite trend, which is either they close it below the 50 or they close it back up above the T line. Let's see, coffee. Coffee just starting. That's a good looking chart. And this is kind of your double bottom. This is what I call the stutter step, where you start up, you pull back, and then you have another buy signal doing a double bottom. Sometimes the double bottoms are right at the same level. Sometimes they're pull back, not quite to this level, and start back up. But coffee, I wouldn't be afraid to be buying at this point. And we did sugar. See, sugar's really not doing anything. It's already made its move from the inverted hammer back up toward the top of the trend channel. And cocoa might be something to look at as far as if it opens lower tomorrow, doing a bearish flutter kicker to the downside. Could be coming back to the 50s. Yeah, that's the coffee index, or the coffee ETX ETF. So, all right, what else do we got out here right now? With the market kind of still in this slow, steady uptrend, we still have quite a few stocks that are doing our. That's not it. That's copper. CPE, for example, still in a steady eddy move. Even right now, Twitter in a steady eddy. You stay long on this one. Now, it's just gotten to the point where they filled this gap, but it looks like they've told us that even though the gap's filled, they're not backing it off. So might be looking for this to still go higher. Twitter, SEM, also is one that we've been following in the past. Also a nice steady eddy setting up right here. Notice how we came out of this flat, indecisive trading, boost. Now you have a 45-degree steady eddy, and that's pretty much what you kind of expect after those big pops. Just look for that 45-degree, just a high probability trade setup. And ACHN backed off a little bit today, but it's also probably in this 45-degree to the upside. I would just stay with this as long as it doesn't close back below the T line. Let's see, some of the biggies like Goog. Goog is trying to break out, also off a double bottom off the 50-day moving average. Morningstar signal, double doji. If this opens positive, it means they're taking it higher, which means if Google's trading higher, it means the market's probably trading higher. On the other hand, Apple showing weakness. So I would suspect, I wouldn't be long right now. Obviously, wouldn't be long ever since this trading day. They couldn't get it back up above the T line. But I would suspect right now they're going to move it sideways until the 50-day moving average catches up. Let's see. We'll get to VJ. Yeah, hold on to your ones. Most of the ones that you're concerned about, we will probably get to before the night is over. Amazon, it looks like it's pulled back, but Amazon just isn't one that right now I would, unless it really opens positive tomorrow and stays above the T line, I'd probably be trading something else just because there isn't really a good trend anymore in Amazon. Now, that doesn't mean in 4 days from now something doesn't set up to where you can see a definite trend. And Netflix, another one where you just stay long as it stays above the T line. Tesla, ever since it broke out, I would suspect is going to be in that 45-degree. And I say breakout because whenever you see a big trading day like this, that tells you there's been a definite change of investor sentiment. Are you trying to get to the word split? Is that is that what you're looking for, Joseph? But anyways, Tesla, you just stay long. Yep. Okay. All right. James, we'll have to check. We might do a entry and exit strategy on the 5 and 10 minute before the end of the week. I say I have to check to see what the schedule is, just because I've been out of pocket here for the last 3 days. We'll see what we can get in this week. That's Tesla. VJet. VJet Just a nice looking pattern. And again, here's the obvious. The obvious is where do most people sell? They panic sell at the bottom. Now what do we have down here at the bottom? This big fry pan bottom setup. This one you want to stay long until you see a sell signal. And at this point, you just stay long as it stays above the T line. PTX is another one that has been acting nicely. Coming out of this little fry pan bottom, more of a slow curve setup. And all you can do with this is, with it being up in the overbought condition and you're seeing a potential sell signal, meaning a hanging man, this is where you just now become alerted to what should not happen if this is an uptrend. And at this point, it should not come back down through the low of the hanging man. If it did, that tells you the sellers are still there. You close out the position and just wait for the next buy signal. All right, let's see what else we got on here on the list that was looking good. IMPV. Still looking for this to break out. I think, do we have this on the breakout list on Friday? I can't remember. But I would be ready to buy this one because here you are at the critical points where, let me even make this bigger if I can. What did it do when it bottomed out? Did kind of a double bottom and has moved sideways right to the 50 and the T-line have come together. Now, a lot of people aren't watching the T-line, but there's a lot of people watching the 50-day moving average. Didn't do anything of any great consequence today. Now, had it opened positive and traded up here, would have been going after it immediately. This would still be on your list. If this opens positive tomorrow, doing kind of a Morningstar signal above the 50, that's where you're going to start seeing a lot of action. That could be true too, Joseph, on Apple. But the proof of the pudding is that they're selling Apple right now. So it doesn't matter why it's there. We can see on the charts what they're actually doing. What else I got? AAV. AAV is just hanging on here. This one has to open positive and trade positive to stay long. But that's would be the anticipation, this upward trend channel. Every time it came back to the T-line, notice how the tails are taking it down, and then if they open this positive, you want to be a buyer because your next target obviously is going to be the top of that trend channel. And let's see, Twitter, XON. XON is another one of those that we're just hanging on to as long as it doesn't close below the T-line. Got some very good profits on it ever since it broke out through this level. And as you can see, every time they pull it back right to the T-line, they take it back up again. So what's the expectation here? Not so much that they're ready to roll it over. It's more they're kind of resting in here. Look for the pop to the upside from this one. That's just because the indication is that every time they sell it off, they're buying it back. Here's AXAS, another one that has stayed above the T-line, except for right here. And this is where you give it another day. This is your influential signal. Is the kicker signal. And they didn't do anything real decisive, but this is one where even on a day like this, you give it one more day because of this signal right here, which obviously over the last 2 days of trading has worked out nicely. But this is the kind of honing your decision-making process. That this looks like a sell signal, but this is a strong buy signal. Now you got to see which one the winner is. If they open this lower, you closed out the position. It had to open higher and trade higher to stay in it. Is there a formula or T-line crunch signal. No, it's just pretty much visual. And this could be obvious or looking like a T-line crunch, but it's already broken out through the resistance level. Now, let's see. Ruckus also continuing to hold up well. Again, indecisive trading sideways right to the T-line. They couldn't close it below the T-line. You just stay long until you see a sell signal. More than likely, this is still your target, the 200-day moving average. All right, and here's one B. Bed Bath and or not Bed Bath and BlackBerry. When they gap it up like this, especially coming out of a pattern, this is where you don't get real anxious to take profits because somebody's already taken profits up here. Had they opened it lower the next day and started trading it lower, yeah, probably they're more profit taking, bringing it back to the T-line. The fact that after they gapped it up and there was profit taking, this is why the candlesticks are so much more clear as to what's going on, because this told you after the profit taking on that day, they were still under the same force of that gap up. You pretty much stay long until you see a sell signal in this one. Let's see, we've done those. Here's another one that looks pretty good to keep an eye on for tomorrow. Wave 1, Wave 2, Wave 3. Get ready to buy this on positive trading. You probably you might see that one on the recommended list tomorrow for the fact that they pulled back indecisively to the T-line and do a bearish engulfing signal. They're ready to go. Let's see. This one's a good-looking chart, QTWW, because it came up, hit the 50. Where did it pull back to? Right smack dab to the T-line, and now are they trading back up above the 50? Where's the next logical target? Right up here to the 200-day moving average. So I wouldn't be afraid to be buying this one on positive trading tomorrow with a very simple stop loss. It shouldn't close back below the 50. And this is telling you the force is there. The consolidation's over. Now look for the next resistance level. And let's see, fuel, there's that fry pan bottom, slow curve. And what's this tell us right here? They aren't resisting at the 50. Where do most people sell? They panic sell at the bottom. This is why you always look for buying starting when they've gapped everything down. This was my pure education when candlesticks first came along. Is if I own this, I own this, I own this, and finally, man, get rid of it. It's terrible. And then I'm thinking, how come when I sold it down here, it just started going up? This is because if we can graphically see what actually goes on in investor sentiment, that most people panic sell at the bottom. That's where the smart money starts buying. And that's what, this is kind of the purest chart form showing what turned my terrible investing completely around to where instead of selling down here, I was looking for this type of situation to start buying. I'm looking for what's happening when we get to resistance levels. And I can see what type of signal pattern is occurring when we get to the resistance level. We had a little hammer type signal, made it very simple. We're up here in the overbought area. If they opened lower, that pretty much told us that the 50 was going to act as resistance. They open higher, pretty much tells you the 50 is not going to act as resistance. This slow curve type pattern is still in progress. GNRC, that's your best friend right there, your doji gap up. There's our next logical targets. Again, this is nothing more than visually seeing what your downtrend was and seeing what your signal was that told you that there's a change to that investor sentiment. You're starting to go the other way. CONN. Oh, let's see. Before I forget, which I probably will, I've got a few emails from people wanting to know more information about the private training up on Keuka Lake. I'm not ignoring you. I just got back from New Jersey. I'll get back with everybody over the next couple of days and explain the benefits real quick. The benefits are that we start from start and go right through the very end of kind of the concept of candlesticks or the perception of candlesticks, so that it puts it in an orderly manner to where you're understanding everything that you're looking at as far as your confirming indicators on top of the signals. Keuka Lake, no. So with that price, $4,900, you don't have to worry about room. We've got rooms there. We're in a lake lake house, nice lake house. So everybody's got their own room. Just have to share the bathrooms. You don't have to worry about food. We get some great restaurants right there along the lake. All you have to do is bring your bathing suit, and some people bring their laptop. And I can pretty much say without too much fear that once you leave one of these training sessions, not only will you have a whole different conception or conceptual view of how to use candlesticks, but you'll have a whole different conceptual view of how to be investing, that you're now investing based upon the correct indicators or the correct signals versus what all the rhetoric is usually out there. I hope I said that all right. Jitu, is that pretty much the right thing? CLMT. All you can do here is stay long with that little gap up from a bearish signal. If it opens positive, you're in wave 3 on a breakout with a flutter kicker type signal. You should have another move of the same magnitude as that move right there. And MWW, there's wave 1. And notice this is the nice visual benefit of candlesticks. Notice on the pullback, there was one decisive day, but there was 6, 7 indecisive trading days till they came right back to the support levels, and they were still indecisive. And this told you a completely different story. They were decisive about going in this direction. So it just puts you in the right direction at the right time based upon what we visually can see is going on in investor sentiment. FEYE, I wouldn't be afraid to be buying this one. Again, where do most people sell? They panic sell at the bottom. That's where the buying starts coming in, and that's where you can start seeing your patterns. The J-hook pattern came up through the 50, Morningstar type signal at the 50 in the T-line. Anticipate more upside. IG. Wouldn't be afraid to be buying this one on positive trading tomorrow. That tells me this little J-hook pattern is breaking out. So essentially, I'm always looking for the patterns that are going to tell me that if I'm buying, that buying is going to put me in a situation where the probabilities are in my favor, just based upon the historic results of patterns of where I want to be investing. Notice where this started its pop-up from a flutter kicker, fry pan bottom, best friend gap out through the fry pan bottom, still moving up. Again, all you can do on one of these is stay long until you see a sell signal. OHRP, there's that slow curve breakout. Where did it break out? Through the 200 and this whole resistance level. Probabilities are we're moving higher and probably going to go up on a 45 degree from here. Yoku. There's your stutter step, or basically staying above the T line. Makes it very simple. If this opens positive tomorrow, what do you think everybody and their brother is going to be seeing? That it's breaking through the 50. We know but it's supporting off the T-line, still doing buy signals right here. If it opens positive, we want to be buying immediately, because when it starts confirming everybody else's indicators, they're still going to be buying uh, the position that we got in early. So if we can buy the patterns, knowing what the results should be, like a J-hook pattern on TX, we know what the results should be. If they open this positive, there's wave 1 going into wave 3. Venda is another strong J-hook pattern setup. How did it start? With our kicker signal. Where did it pull back to? Smack dab to the T-line. And where did it break out? Right here. What's our upside potential? The same magnitude as this move right here. So the probabilities of being on the right trade at the right time is extremely strong. Let's see. So finding these T-line crunches is done by looking at charts. No better way of finding them. Yeah, you can. You can do searches. You can ask Ed C. Do the formula for a T-line crunch for me. And yeah, again, the visual capabilities of candlesticks and the confirming indicators is all just a function of putting the put what you can easily say into a formula. All right, Ed, thank you. Another J-hook pattern. Wouldn't be afraid to be buying this one, because if it breaks or trades positive, there's my wave 1, there's my wave 3. All I have to do at this point on the breakout is not let it close back below the halfway point of this candle, which was telling me they were breaking out. And then after that, don't want to see it close back below the T-line. CCZ, you're probably going to see this one on the recommended list, because what do you have here? This is our classic, the fry pan bottom. What do we expect coming out of a fry pan bottom? A very strong price move. Very strong price move, followed by indecisive trading and starting to curl back up. Notice our doji sandwich after a couple hammer signals smack dab on the T-line. If this opens positive, what do you think our next target is? The same magnitude this move right here. That's called the classic. All right, thank you, Jim. SAIC. There's the classic. Fry pan bottom, strong price move. Once again, notice once it came back to the T-line how decisive it was. Very indecisive. Doji, hammer, star. Curls back up. You want to be buying this one on any positive trading. Oops, hold on for 1 second. Lost my spot here. There it is. All right. Did I do? Oops. MWW. There's your J-hook pattern. Did we look at that one already? We might have. M-E, whoops, I. Fry pan bottom. Pull back. Indecisive. Breaking out through this level. Look for another price move of the same magnitude. Another 8 points would take you up into about the $42 area. And this one's probably going to be on the recommended list. ECOM. Came up, hit the 50, pulls right back, smack dab. Let's make this a little bit bigger. smack dab to the T line, hammer doji, close right about the T line. If it opens positive, where do you think our next target is? Probably up here to the 200-day moving average. So anytime we can see that setup, and remember, the reason we recognize setups is because they have worked in the past. That's why we're recognizing them today. It's because we know there's expected results when human sentiment creates a pattern like this, that once they break out, after kind of a J-hook pattern, you're going to have a very strong price move. Okay, and SU is still, oh, that's not the SU we're looking for. SU, that there's that breakout. There's your slow curve, kind of your fry pan bottom, strong price move, J-hook pattern. And notice how this J-hook pattern is starting. Little trend kicker type signal. So the reason I like to show this one is because visually, symmetrically, it's very obvious that they broke this out. It's very obvious they're doing a J-hook pattern. So buying calls right in here has a double benefit. Number one, you've got the potential of a big price move. And number two, can you imagine how enthusiastic people must have been about buying the calls right here? They just went through 4 weeks of just a lousy, crappy trading. You weren't paying any premium on these calls. Now all of a sudden it starts breaking out, so you bought them cheap. The intrinsic value is moving, and the premium is expanding because everybody's now getting back excited. Same scenario here, profit taking, now slowly curling back up. Also, probably a very good time to be buying. Is Ecom a T-line crunch? Not necessarily. Usually a T-line crunch, it's got, yeah, you could consider it a T-line crunch, but I'd consider it more of a pop-up and a pullback in the J-hook pattern. Usually a T-line crunch has a good, but 4, 5, 6, 7 days of where they are pushing it up through the resistance level. Is the double top on this one to be worried about? Is that not necessarily? The stochastics aren't in the overbought area, and this is a pattern that's telling you that the buying is still in after it's hit the resistance level the first time. Ooh, okay, and the other pattern that works extremely well, the fry pan bottom. There's buffalo wings. Notice, let me see, make this more noticeable. Notice what happened at the end of your fry pan bottom, right where it started. What did they do? They gapped it out through this level. What that pretty much tell us? That the enthusiasm of this fry pan bottom was in effect, and this was not going to act as a resistance level anymore. Are you enthusiastic about the calls here, or just shares? Yeah, I bought some more calls on this one. I can't remember the numbers, but if I recall correctly, I think I bought the July 45s for, I think, 20 or 25 cents. The reason for that is, if this one doesn't work, I don't have a whole lot of money in the trade. The 44 and the 45, okay, thank you, Lori. If it does work, they're going to quadruple. So my downside risk is pretty small. James, I can't remember which one that was. My downside risk is fairly small. My upside potential is pretty big. What else do I got here? Mill. mill. There's that slow curve. And where's the slow curve coming from? Right smack dab off the 50-day moving average. Once again, notice what this whole series told us. Decisive trading. And what's this tell us? A doji gap up. This was not an indecisive candle, and this is not an indecisive candle. That pretty much tells me I can pretty well guess, if I can do this correctly, where my next target is going to be. I hate that. Oh, man. I got that thing stuck on there. Whoops, you can't see it. There's a thing on there. Bah, humbug. But where's our next target? When they gap this up through the resistance level, more than likely they're going to take it up to the 200-day moving average. SNX, J-hook pattern, little kicker type signal. This tells me I've got wave 1. Wave 3 is probably in progress. FRX. Let's make this bigger. Kind of a fry pan bottom breakout, tells me that we're heading higher on this one. And WPX, we're already in this one, but this is kind of what basically happens coming out of a fry pan bottom, is we're going to have a good strong uptrend. Am I worried about a bad day like this? Nope, because the force should be taking us much higher. If buying mill on the open, where would you put your stop? You're not seeing that little thing. Okay. If I was buying this on the open, if this was the candle that told me that they were breaking out through this level, where would I not want it to close? I wouldn't want to see it close back below the halfway point of the candle that told me the bulls were in control, breaking it out into new territory. So whatever this is, 540. So if I'm buying right here, what are my expectations? And this all comes to, where do you put your stop based upon what is the pattern's expectations? We're not buying this because it looks like it's going up. We're buying it because the expectation of coming out of this pattern is that it should be going up. That's the whole purpose of knowing which patterns work effectively. Which means if we're buying something with the expectations of it going up, then it shouldn't close halfway down the candle that told us the bulls were in control, because that deletes, or that negated, our expectation that it should be going up. So I guess it's somewhat like the cart before the horse, or vice versa, that you're buying based on what your expectations should be coming out of that pattern. If GWPH opens lower and trades lower, get out. GWPH. You can get out on the basis that more than likely they're going to come back and test the T-line. Now, that doesn't necessarily, so that would mean, yes, I would get out of the trade, and that would tell me that my next pattern is setting up. That if this is my fry pan bottom strong price move, and it started coming back to the T-line, I want to be out, because what are my expectations? It's probably coming back down to the T-line. Then I can watch to see if the J-hook pattern is setting up. So this is where I definitely do not mind closing here and buying back a few days later, knowing that it's doing a J-hook pattern and heading back up again. And again, that was part of my emotional trauma with most of my investing prior to the candlesticks coming along, is number one, if I took profits here and it turned around and went up, boy, that would look stupid if I bought it back. But that was because I had no idea why it was going up, or why it was pulling back, or what type of patterns it should make. It was just that I made the decision it was time to take profits, and that would be pretty stupid to buy it back, knowing that, boy, you'd look more stupid if you bought it back and it turned right around and went back down again. Let's see, a couple on the short side. And I still would want to keep some short positions in the portfolio, just because this market obviously is not in a rip-roaring uptrend. It's a slow uptrend with periods like this. So right now, this market, with its slow uptrend, is pretty much telling us there are good stocks to be bought, and there's other stocks to... now what happened? That's because I just did the wrong chart. MTZ. There are other stocks that you probably want to go short. Now, somebody was asking me the other day, are you always 100% invested, or do you have some held back in reserve? And the answer is no. I'm usually 100% invested, but that doesn't necessarily mean I'm 100% invested long or 100% short. I might be 80% invested long with a couple short positions because that's kind of my hedging so that I'm not getting crunched if the market turns on us. At least I'll have a couple short positions that are working in the right direction. And if the market turns on us, I might close out another two long positions, add two more short positions, so I'm at least taking, uh, um, let's see, nullifying some of my losses based upon the short positions, adding equity to the account. So that's to MTZ. TWI looks like it's had a left-right combo failing at the 50, which this comes back to the simple statement, observe the obvious. The obvious is this is a downtrend, and every time it hits a resistance level, they're selling it. Where's your next target? Possibly at the bottom of this trend channel. It's failing at the top of the trend channel. More than likely, it's coming back down here to the bottom of the trend channel. RPTP. Oh, Pascal. RPTP. Make this a little bit bigger. Hasn't told us that there's a confirmed reversal, but it's pretty much told us we've got a strong sell signal. A doji at the top, followed by a lower open, and even a close below the bottom of the doji. The only qualifier at this point is the close right here on the T line, which makes it very simple. If it opens lower tomorrow, you can be shorting this with the prospect that it could come back to the 20 or come back to the 50. But again, that's a sell signal, and or we watch to see if it does a J-hook pattern. But would I be shorting this tomorrow if the market opened up or opened flat? No, because the uptrend right now is in progress. However, if we woke up tomorrow and the pre-market futures are showing the Dow is going to be down 80 and the NASDAQ down 15, yeah, I might add this one to the short side, just anticipating there's going to be some profit taken over the next couple of days. Yeah, and that's the other thing. I don't like to short the biotechs, but since I wouldn't be shorting it for a 4-week stint, I'd probably be shorting it for a 3-day trade. I'd take that risk. Normally, I don't like to short the biotechs. And DGI, a good short setup because what do we have right here? A doji followed by a gap down through the resistance or the support level. Tells us, or at least we're probably coming back down to test this level, maybe even further. So with that, I think that's about all I got. Let's see, I put a couple stars against, I'd keep an eye on Mankind tomorrow. Notice your wedge formation with a bullish engulfing at the end of it, closing above the wedge. Wouldn't be afraid to buy this one, anticipating we're in wave 3. And Econ was another one that if this opened positive tomorrow, wouldn't be afraid to be buying this one. With the potential of the next move up to the 50-day moving or 200-day moving average. ACHM, no, that's not really an evening star signal. Remember, an evening star signal needs an indecisive day up here. I'm still looking at the fact that we've had a big move. We're still in the 45 degree, and you stay long as it doesn't close below the T line. Okay, I guess that's about all I have tonight. Are there any general questions on candlesticks? General questions. The Russell 2000, a bearish engulfing. Yeah, but not a big severe, and it's just very close. Now, the reason this may not be a reversal is a few other factors. Could be a bearish engulfing signal, number one. That's the sell signal in the overbought condition. However, what are the other factors we're looking at? Number one, it closed right on the 3T, so it hasn't closed back below the T line. Number two, it looks like it's doing another J-hook pattern. So if this was a wave one of this wave three, that tells me there's probably still some more upside to equate to this move right here. So, yeah, I wouldn't be too concerned with this because the other indexes didn't really show anything that was showing there was any great selling going on. I get confused on sell signals above the T line. That's where you need the confirmation. The longer a trend persists, above the T line, the more compelling the sell signal needs to be. Now that's an obvious sell signal. That wasn't indecisive, and it closed right here on the T line. Made it very simple. They needed to open up positive and trade positive to keep the uptrend. If it opened lower and started trading down, you closed out the position. And what's the very worst case scenario? If it opens lower and trades down and you closed out the position, worst case is if it came back up and traded back up above the T line, you could always buy it back in. So your insurance might have been that you sold it here, came down, and you bought it back here, but at least you weren't holding on to something that was moving in the wrong direction. Left-right combo. Let me see if there's a left-right combo on here. Left-right combo is a doji followed by a bullish engulfing signal. I don't see one on here exactly, but I'll find one. What do you think of a scan for extreme stochastics and a cross of the T-line, 3T and 8T to look for a likely reversal? You're probably doing it backwards, Marty. You probably want to be looking for your reversal signal and then see whether you're in an extreme overbought, oversold condition of the stochastics, and then see whether the 3T and the T line have crossed. Remember, the first criteria of any reversal is the signal itself. We always come back to one simple statement. If you see a candlestick sell signal and a close below the T line, that's what you need in combination. But the first criteria to that is the candlestick reversal signal. A 45 degree is when you have a big price move, like a breakout, then you usually see it move in a kind of a steady uptrend, about a 45 degree off of that uptrend. And if you see that big price move and the 45 degree start, you can pretty much stay with that trend as long as it doesn't close back below the T line. Let's see. TEG is considered a nice gap up with more upside. That's what you'll have to see. Notice that what this day was. It was an indecisive trading day, kind of a doji, inverted hammer, or shooting star, but it was a breakout of a fry pan bottom. So it makes it very simple. If you own this and you stayed with it, what do you want to see, or what do you want to see if you want to buy it? You want to see that they open in positive and start trading positive. Remember, the simple rule of a doji type day is they're going to move it in the direction of how they open it. Now, if they opened it lower and you owned it, that's a good place to start. That they're still taking profits. You close out the position. Once again, the worst case scenario is you close out the position, they take it down. You can always buy it back when it's on its way back up again. Oh, okay, so that was a buyout. More than likely, if I had that close to the buyout price, I'd take my profits unless there was a white knight situation where another one would come in and somebody else would come in and offer a higher price. But that would be reflected in the price. If you see somebody get bought out at $51 a share, I'm sorry, $71 a share, and it's closing right there at 71, that means the risk factor should be that if somebody's being bought out for $71 a share, it probably should be trading for around 69, maybe 69, 70, somewhere in that range, because the difference is the risk factor the deal might not go through. But if it's trading right at 71, that means somebody in the know says, all right, that 71 bid was by one company, but the risk, I mean, there's no risk factor built into it. It means there's possibility of another person coming in or another company coming in and making a higher bid. Let's see, ACHN, Doji in the overbought area. Should I put a stop on yesterday's low or get stop out today? Right now, today, unless, is that the correct signal? Let me make sure that they're HM. That still looks like it's, well, maybe it's different. This to me isn't really decisive yet. I'm still thinking that you're looking at a trend channel, the 45 degree. With this chart, it's showing more representative of a lack of a doji day than just a gap up down day. If you bullish engulfing pattern works yesterday, how do you assert it will work tomorrow? With a lot of computers in place, don't you think emotions won't come? KP, you got me stumped there. If your bullish engulfing pattern works yesterday, how do you assert it will work tomorrow? With a lot of computers in place, don't you think emotions won't come into picture? Oh, are you asking that if you see a bullish engulfing signal, shouldn't everybody be jumping in? Is that the question? If that's the question, the answer is because, yeah, you need the confirmation that the bulls are still there. The bulls on some chart, and it worked well. Um, Oh, what is the pattern? What's the guarantee the same pattern will work tomorrow for that stock or that for another chart that had a bullish engulfing signal? Number one, the reason we're looking at bullish engulfing signals, and anybody think of one? Yeah, the reason that we're looking at bullish engulfing signals with seeing bullish confirmation telling us that's a buy is because the Japanese rice traders over the last 400 years have identified that as a reversal signal. So that's where not the guarantee, but the high probabilities, thank you, David, is that that's a reversal signal, that if there's bullish confirmation afterwards, that's probably tells you the bulls are now taking control. VJet this morning seemed to be trading with a great enthusiasm, then started to pull back. So this is what you have to take into consideration. If VJet started trading strong this morning, were you trading it on a day trade basis on the 5-minute chart, or were you holding this as a long position? Let me see what we got here. I take it this this one right here, is this what we were looking at on the pullback? First of all, the 5-minute chart is less important to me than the 10-minute chart. And the 10-minute chart did come back below the T line, bounced off the 50, but the 10-minute chart wouldn't have been that critical for me at this point because we're still in an uptrend. We haven't gotten to any extreme overbought condition. So this is what I would be expecting coming out of this chart pattern, is to have a strong day. Just because it started selling off sometime during the day doesn't necessarily mean it's not going to end up. If you're trading based upon a candlestick buy signal, a daily candlestick buy signal, then you have to sell based on a candlestick sell signal, with the caveat that, gotta go way back to this one since this is the one I remember. With the caveat, make this a little bit smaller, that if you're up here in the overbought condition and you've now started to move way away from the T line, then you can flip to your intraday charts. But on a daily basis, we were holding on to this pattern because the daily chart pattern was telling us we should have a very strong price move on a breakout. So that same scenario should be applied to VJET. But this is a chart pattern that should be heading in this direction, and we're not anywhere close to being extremely overbought. We're still pretty close to the T line. Oh, Abby, no, I'm sure the Japanese rice traders got very emotional, but that was the kind of I want to say, somebody digging into human emotions, because where do most people lose their money? It's because of their emotions. And so if the Japanese rice traders kind of figured out that if you can graphically see what's going on in human emotions, now you can start projecting or predicting what's going to happen. Okay, let's see. All right, Jim, let's go ahead and do the double line. And in 4.7 seconds, do another double line. It looks like we will have most of them on the menu here. Okay, Vivus. Let's make this bigger. And this little thing is just driving me crazy. I've got a label on here that's stuck right in the middle of the charts. That's just fine. Howdy do. Vivus, all you can do is stay long, except for the fact that you did have a big bearish Harami, but you're supposed to be in an uptrend, which makes this very simple. It needs to open flat and trade higher tomorrow. If it opens lower and starts trading down, close out the position. More than likely, they're going to bring it back to the 50-day moving average. AVY. This one is not a reversal signal. That's just a down day in an uptrend. I would still not want to see it close below the T line, but the probabilities say this was just a bad day in an uptrend. But if this is wave one, wave three still has the prospect of coming up into this area. Tendai kind of lost its steam here recently. This one I would be out of, or you should have been out of. That, again, you're closed right on the T line. It needed to open higher and trade higher. The fact that they opened it lower, I actually opened it right down here and traded back up, would have still had me out of this trade because of two things. Number one, because it was opening much lower than the T line. And two, you can see the trajectory of this move is now kind of a fry pan bottom, but it's probably not going to get real exciting until it breaks back out toward the top of this pattern. MDSO, still in this uptrend. Even though it traded off today, let's make this bigger. you still didn't break the trajectory of this this trend. You stay long on this one until you see a sell signal. Office Depot, another one where you just stay long as you don't see it close below the T line. And VDSI, that's not what we want. VDSI, this one, you need to see it open positive. I mean, it's come down. Let's make this bigger. It sold off, but notice where it didn't close yet. Hasn't closed below the T line. This trajectory or this fry pan bottom is still in effect as long as they don't close it below the T line. SMCI, this is getting a little bit soggy up here, but as long as it doesn't close below the T line, you stay long. And PTLA, make this bigger. Now this one has moved a little bit away from the T line, but there's your strong price move. There's your left-right combo. If this opened lower tomorrow, I'd probably take profits with the anticipation it's going to come back to the T line and then watch to see, because remember, this is a strong price move. What makes the difference between a J-hook, an effective J-hook pattern or just a pullback? Well, the fact that they were in here with great strength to produce this type of price move on a very short period of time, more than likely this is human nature doing the pullback and getting ready for the J-hook type pattern. AMKR. No, this is probably on anime. Is this a place for buying puts or selling shorts? J, no. I would suspect more of a J-hook pattern setting up at this point, because you have had this strong, steady price move. Unless something has severely occurred that has changed everybody's mind, this looks more like a J-hook pattern setup. VTUS. This one's got a nice little J-hook type pattern. This one I wouldn't be afraid. Just make sure your volume is good on this one. Whoops, that was way too much. And then if I was buying on positive trading tomorrow, definitely would be using the T line as my stop. Groupon. Another one that I wouldn't be afraid to be buying. This is the typical. Came up, hit the 50, pulled back to the T line, closed back up above the 50. Tells you they aren't selling it off. Wouldn't be afraid to be buying this one in positive trading. And then tomorrow I'd use the halfway point of this candle as my stop. If it closed back below that level, that was telling me the bulls aren't in control yet, and they couldn't get it to stay up above the 50. I'm going to go back to that one in a second. But here's, just observe the obvious on this one. Came up, came right back to where? Over here, went through the resistance level, came back, and you can see very visually that it acted as support. If it opens positive tomorrow, what do we got? A doji sandwich. If we got a doji sandwich about this magnitude, where's it taking us? Right about to this level. If it breaks through this level, where's our next target? More than likely the 200-day moving average. And some people, and again, this is one of the things that we kind of go through at the lake, is I guess I should have expounded a little bit on the lake's purpose, is if you've got some sort of flaw in your investing or your way of thinking. For example, say you can see the patterns, you see the charts, you know when you should be buying, you just can't pull the trigger. This is what we can do with kind of digging into that right there in front of the screens at the lake. Say, all right, what is your game plan on this one? Where is the expectation of this chart pattern? It should be up further from here because it's breaking through the 50. So we know what we need to see. Number one, we need to see positive trading. Number two, what should we not see? We should not see a close back below the halfway point. So it gets you where you can at least mechanically tell yourself, this is what I should be doing. This is where my stop is. So the next question is, if this is a good chart pattern, why am I not buying it? And I say this because there's been many times in my life where I buy stuff, it goes down, buy stuff, it goes down, buy stuff, it goes down. I look at another chart pattern and say, all right, it looks like a good chart pattern, but man, I've been getting hit. Got to remember, the market, the charts, don't give a hoot what you've done in the past. That probability of that chart is still the same on the next trade as any other good chart pattern. Oh, palladium, I'm thinking that's not what you want. So this one, that's a nice J-hook pattern. I wouldn't be afraid to be buying PAM. TFIE. Now, and I kind of fluffed over that. If you've got some sort of hiccup in your investing, and I say hiccup in the sense that there's people that can look at the charts, they know when to get in, they don't know when to get out. So, or they see something, they get in, but they can't figure out why they're not making money. And it turns out, if you analyze what you're doing, you're getting in too late. You're waiting for it to confirm, and instead of on the initial confirmation, you're waiting for everybody else's confirmation, which is usually the time to start taking profits. So we go through a lot of how to, and because there's only 4 or 5 people sitting around the screen, we can go into somebody's mental flaws, which helps that person out immensely, and more than likely, it's the same symptoms that other people have, that it clears it up for them also. This is PFIE, another nice J-hook pattern, and how's it starting? With a left-right combo. There's your left-right combo, doji, bullish engulfing signal. But it's also a left-right combo inverted hammer with bullish confirmation off the T-line. Just makes the very high probability this one's going higher. That was PFIE. Where did I see that? Okay, and TGTX. Another nice J-hook pattern. Stay long on this. RFMD. RFMD has now gone the opposite direction. This one should have been closed out. There's your left-right bearish combination with a doji followed by a bearish engulfing signal. And where did everything close? Again, below the T-line. That tells you that the bears are in control. You want to be out of that trade. PetSmart. This one you can be buying on positive trading. Just be aware that your first target is probably going to be the 50-day moving average. This one you want to get ready to go short. This is WFM, Whole Foods. If this opens lower, you've essentially got a bearish doji sandwich to the downside. After a left-right combo here below the T-line, that means you're probably at least going to come back down and test this level and maybe even go lower. Nuance, you stay long. It's in a 45-degree. I haven't been around for the last few days, but I would still suspect that there's probably a good prospect of Nuance being bought out by a bigger company that doesn't want to reinvent the wheel and try to get into the voice recognition area. LQDT, this one you can be buying on positive trading tomorrow, coming up through the T-line. Anytime you see that breakout with that kind of that slow move up there and kind of little scoop pattern, somewhat the same lines as IMPV. Oops, got to make this big enough where we can see what actually is going on here. We're right at this breakout area. If they open this positive, you want to be buying this one right away. OVRL. There's your left-right combo, right smack dab off the 50. There's your next target up here at the 200. And DVG, S dot DVD. That one's not found. Pran, you stay long on this one as long as it stays above the T line. Still have this big fry pan bottom. And so the risk reward factor here is if you've bought this in the last few days, which we have, you just hold it as long as it doesn't close below the T line. If it closes below the T line, it tells you this trajectory has now been breached. But as long as it stays above the T line, there's a good prospect that if they break this out, that they could break it out big time. Oh, man. To the point where they broke it out here, they could take it all the way back up to the 200-day moving average. DYAX. All you can do here is stay long. This is still kind of that 45 degree. Notice your big breakout, consolidated, but now you're in a 45 degree off of here. Notice the one thing they haven't been able to do yet is close it back below the T line. That's a nice fry pan bottom breakout. All you can do with this one is stay long as it stays above the T line. At this point, yeah, just use the T line as your stop. ITMN, there's that little consolidation. And notice what it hasn't been able to do. Closing below the T line here did a kicker signal. But observe the obvious. The obvious is the T line's acting as support. This one you can still be buying if it opens positive because then your next target is the top of this little trend channel. SONS. There's your trend kickers signal. There's your breakout. Just stay long as you don't see a sell signal on this one. UPL row. Another fry pan bottom with a doji. Means if they open this positive right about this breakout area, you can be buying this one and still use the T line as your stop. FAS, J-hook type pattern, stay long, especially if they open this one positive tomorrow, breaking out into new territory. And BLDP, after your bullish engulfing signal, strong price move, stay long on this one as long as it stays above the T line, especially above the 3T line. VG, wouldn't be buying this one yet, but you're right there about ready to break this downward trend channel. If you're buying it, you just be a little bit more conscious of what happens right here at those moving averages. DDD, still a nice looking J or a fry pan bottom. Bah, close that. Close that. All right. Nice fry pan bottom. Expect the, especially if they open this positive above this level, expect the 200-day moving average to be your target. GERN. Notice where they came back to today, right practically to the T9. This one you can still be buying on positive trading tomorrow with the 200 being the viable target also. Okay, Elliott, LNG, long term. Let's take a gander at the long term. Looks pretty good. I would suspect that with it in the still in a 45 degree off of this move, you still stay right along the trend channel. The other long term is WLL, came out of this fry pan bottom, broke this level right here. So you just stay long on this one. Still expecting over $100 on that one. Let's see. Oh, I would guess. Let's see. This one's trading at. We got so many numbers over here. What's happening? Okay, there we go. Now we can see better. I would suspect LNG has a bigger percent move. So they both look good. I mean, to try to pick one over the other, I don't know. They both look good. CMG, just stay as long as it stays above the T line. Lows, Lows, I probably wouldn't be long or short just because of the chart not showing any real great trend. Let's see. Royal, Royal, right now, all you can do right now is stay with this as long as it doesn't close below the T line, which it didn't do today. Court, nice breakout. Another one, you just stay long until you see a sell signal. And KEYW. This one you get ready to buy if it comes up through the 50. Fry pan bottom, breaks through the 50, it's going to the 200. That fry pan bottom type breakout setup. Another fry pan bottom. This one you stay long as it stays above the T line. And plug also, you can be buying this one on positive trading. Breaking out. And WPRT, this one should be going toward the 50-day moving average. Notice how it's using the T line as support. Let's see. KPTI, there's that consolidation. And this one you can be buying on positive trading. This has the prospect of going into the 45 degree. And DFRG. Look for your doji sandwich. If it does a doji sandwich, they're taking this whole fry pan bottom up higher, trying to break out through that resistance level. But I would be buying this one on positive trading tomorrow. SLPX, another doji sandwich setup that would also take you into higher territory if it opens positive. Let's see, we did KEYW, Beat, another one you can buy on positive trading, and you close out if it closes below the T line and the 50-day moving average. This one needs to open positive and trade positive. And boy, that's really gotten beaten up. We used to trade end way higher. Right now, I probably wouldn't be long or short until I see some more bullish confirmation off this kicker type signal, but it needs some more strength. SPSH. NPSH. That one's not coming up. S.NPSH. Nope, not working. BAM. Nice J-hook pattern setup. You can buy this on positive trading. And I love you too, Neil. XOXO. This one you buy on positive trading. You're in an uptrend as long as you stay above the T line. And GMCR. This one I wouldn't get too excited about, but it's got a fry pan bottom. This one, again, we keep coming back to. I'd rather see it break out through this level, then I'd be a buyer. I want to see this one break out versus continuing its fry pan bottom setup. NC, you're obviously stuck between the 50 and the T line. I probably wouldn't buy this one now or go after it aggressively until it does come up through the 50. Whoops, what have I done? I go way up there like that. TXMD. Another one that you stay long as it stays above the T line, and you could probably be buying on a positive open tomorrow. STB. Whoops. STB. STB. This one, you take profits if it opens lower tomorrow. There's a big bearish Harami. If they open it lower, they're bringing it back to the T line. To stay long on this one, it has to open positive and trade positive. HZNP. This is another one that if you own it, it has to open positive tomorrow. If it opens lower, it means you've lost the trajectory of this one. It's not going with any great force to the upside. Yelp can be bought on positive trading. Let's see, we did WPRT. VJet. Yeah, if it opens positive, yeah, there's still a gap to fill right in here. I don't know whether it did, but it's still a nice fry pan bottom. If it opens positive, it's breaking out through this level, which tells me the fry pan bottom is on its way. VTG, that's a long-legged doji. Makes this very simple. If they open this lower tomorrow, close it out immediately. That's the indecision up there at the top. BGCP, another one where you can stay long as it stays above the T line. Array, whoops. Array, there's your left-right combo. If this opens lower tomorrow, you close it out immediately. Basically tells you they can't get up above this level. Over here, they're bringing it back down. GSAP, this one you can be buying if it comes back up through today's open. You've got a very strong left-right combo. You've got a very strong price move. J-hook pattern if it opens positive and starts trading positive. ISR, another fry pan bottom. I would put a buy stop right above here at 285. If it comes up through there, it's breaking out. Just make sure your volume is good on this one. And Dang has a nice J-hook pattern setup. The reason it's got a setup is because notice where they bounced. They bounced right off the 50, did a bullish Harami the next day, closing above the T line, which means if they open this positive, this move right here is continuing on the J-hook. TQNT, yes, you can be going short on this one. If they open this one lower with the anticipation the 50-day moving average is your next target. And Moby, you kind of stay long on this one, but if it closed below or started trading back below today's low, I'd probably close it out with the anticipation it's coming back to the Tesla T line. PEIX, stay long, nice steady eddy. Lulu, you can be buying as long as it shows strength and staying above the T line. Except it's probably not the best looking chart right now. But as long as it's above the T line, you can stay long on this one. PXLW, another one where you stay long as it stays above the T line. Or if they trade this one lower, you close it out, and then you put your buy stop at $8. If it comes up through there, you've got a J-hook pattern in progress. We did Pran, we did Kendai, we did Plug, I think. Yes, we did Plug. plug you can be buying on Positive Trading. We did GSAT, ESC, S.ECS. Is that what I needed to do? No, ESC. Ooh, another, yeah, this one you can be buying on Positive Trading tomorrow, or more conservative, put a buy stop at 33. If it breaks out through there, you've got the pattern working. And CarMax is telling you exactly what's happened after it broke to the upside. They did their profit taking. This one you can buy on Positive Trading tomorrow, telling you the selling has stopped. PAG, that one doesn't look as enthusiastic. It's in a slow uptrend, but I wouldn't get excited about this one. That's a slow uptrend. HOD means end of day, or high of day, I'm sorry. AKS, stay long on this one. That's a good looking chart. ATOS. This one, all you can do is stay long as it stays above the T line. But as you can see, there's really no great trajectory to this one. I would probably be trading something else. And CNAT, this one, you stay long as it stays above the T line also. But it needs to show strength tomorrow. Otherwise, the 200 is now going to become an influence. We did Twitter with a steady uptrend. Starbucks has to open positive to stay in it. If it opens lower tomorrow, you close it out with the expectation that the T line is going to be the next support. AMKR, don't buy it back yet, but I'd buy it on a pattern that brought it back up above the T line. We did ITMN, right? Stay long on this one. This one can be bought on Positive Trading as long as it stays above the T line. BRCD. Oops. Oops. Hold on for a second. Okay. I had to make some notes. BRCD. This one, if you own it, you can stay with it as long as it doesn't close back below the T line. I told you this slow uptrending channel is still in progress. Nubo, as you can see, didn't sell off again today. This one you get ready to buy on Positive Trading because the J-hook pattern will be in progress. CLF, nothing real exciting here. If you own it, you can stay long, but you definitely want to see it open positive. If it opens negative, it's still in this downtrending channel. It needs something strong to get it out of that channel. Meaning there's other places that you probably want to have your money. ALXN. This is a perfect example that if you had bought it today on Positive Trading, you closed it out with it closing back below the T line. Right now, I wouldn't be long or short this stock. LYV, this one you can get ready to go short. Probably wouldn't go short because of the lack of price movement. What am I looking at there? 20, 23. Yeah, it's probably in this slow downtrending channel. I wouldn't be long until it breaks this down or this resistance level, and I probably wouldn't be short because it might be a very slow move back to the 50. ALXN, well, we did that one. Let's see, DYX, we did that one. ISIS, still heading up toward the 200-day moving average. And HIMX, this one you can get ready to buy on positive trading, and then that positive trading also needs to see the breakout of the 50. Las Vegas Sands, nothing here that would get me real stimulated. You're still in this caught in this downtrending channel. I would rather buy it once it broke through the 50. Let's see. All right, a few more. Soda. This one you can be going short. Observe the obvious. Every time it came up to a resistance level and this downtrending channel, I say every time it came up to the 50, I wouldn't be afraid to be going short on this one. We did Tweeter EXEL. Stay long as it stays above the T line. IGT. This one, as you can see, is pushing on the 200. Kind of a doji type day, spinning top, which makes it very simple. It has to open positive and trade positive to stay in it, and then you use today's open as your stop, because if it opens positive and closes back below this level, you've got a bearish engulfing signal right at the 200. If it opens lower, you close it out immediately. It tells you they're backing off to the T line. Let's see, AGMS, S.AGMS, nothing there. FTEK. FTEK. Nothing that I'd get real excited about. Maybe I'm looking at it too big. Let's see if there's. No, still can't get excited about that chart. GLD. GLD, you can still be buying this one with the scoop type pattern, the gap up through the resistance level. You can buy this on positive trading. There's a gap here to fill still. Let's see, didn't we do GXMD? This one, you want to see it open positive to stay long. Q2. J-hook type pattern, especially if it opens positive tomorrow. Doing a doji sandwich. The SPY, you just stay long as it stays above the T line. Let's see, WETF. If this opens positive, yes, that would be a doji sandwich, J-hook type pattern setup. ISR. Get ready for the breakout through this fry pan bottom. Isn't VT USA head and shoulders pattern, or do you really look at the daily candles and ignore the traditional? No, you can always remember you can use the traditional. Basically, the candlestick signals are going to give you. Am I looking at this correctly? A head and shoulders pattern. I don't see a head and shoulders pattern on this one. Am I looking at it wrong? I don't see a head and shoulders on there anywhere. Oh, and this wee little. No, that's not a head and shoulders. That's more of a J hook. Yep. Okay. And Q IHU. Oh, that is in a wedge. I wouldn't be long or short this one. And PFPT. This one you stay long. There's the J hook pattern. You just stay long. Now you do have a little shooting star. So you still need to see positive trading. If it opened lower, you could take profits, but it's probably going to take profits back to the T line. If you see a sell signal at the 3 T line, are you any slower to sell than if it were occurring at or through the T line? I'm a little bit slower because as long as it's above the T line and it's just closing below the 3 T line, then I'll give it one more day. I'll see if they're going to open it positive. But if they open it lower, that means more than likely they're going to come back to the T line. S.J.C. Petty. Yep, it's still we haven't got the write up only because I've been out of town. I'll still write this one up as a long-term pick. Let's see. BLEP. Why do you call it a bearish engulfing rather than a failed? Why do you call it a bullish engulfing? Why do you call it a bullish engulfing rather than a failed bearish engulfing that occurred at the top of an uptrend? That is that a bearish engulfing signal? Let's see, BCRX. That one is kind of your shooting star. If this opened lower with a gap up shooting star, I'd probably be taking profits, but just be diligent to see what it does once it gets back to the T line. And MDT, I think all you can do on this one is stay long as it stays above the T line. Not a real pretty chart. And live, you can be buying this one on positive trading tomorrow. That fry pan bottom breakout through the 50. EMES. What is the question for a short dig gap down from doji then bounced? You can go short if it comes back down through today's open. It should be number one right now. It wouldn't. I wouldn't be long or short because this would have been my signal, which means I would look for it to open lower. Today opened positive, traded positive, so I wouldn't have shorted it. However, that's still a doji gap down. If it came back down through today's open, then I'd be shorting it. That tells me the sellers are still in control. CPE is still in that steady eddy uptrend. You just stay long on this one. And NSPH. This one you can get ready to buy. It looks like it opened higher and traded lower, but if it came back, started trading back up through today's open, that tells me the profit taking's over. You can be a buyer. There's your buy signal. There's your gap up through the downtrending channel and the 50. One should use the whole chart. Yes, okay. Okay. ACHN. The buy point and T line are so far away. The stop loss is around $2,000. What to do? The buy point is so far away. I don't understand. Well, all I can say is stay long as it doesn't close below the T line. Okay, let's call it a night. Again, if you've got questions on the sessions at the lake, we're starting to get people putting in their reservations. And so I'm back, so we'll see everybody bright and early tomorrow morning. We'll see you then.